Welcome to Just a Thought, Investing for Millennials. My name is Sam.
I'm Dominic.
And I'm Brett. And today we'll be going over some basic tips for investing, some recent news articles and how they'll affect the markets, our picks for the week, our stocks we recommend selling. So Dominic, would you like to start us off with some of the tips about earnings reports?
Right. So earnings it's actually a very key indicator in investing, and it's very important to understand what earnings are. So earnings reflects your net income after tax. It's pretty much how profitable the company is. It's really the final indicator. And there's quarterly reports every 3 months where analysts on Wall Street come out with a prediction on what a company's earnings are going to be. And the company ends up releasing it, whatever day their earnings is. And it's a key indicator if they beat it, which means they have higher earnings than what they expected. A lot of times the company could see their price spike. If they come short of earnings, you could see the price go down and take a dip. And it's very important to overall get it. Brett, would you like to further explain?
Yeah, so I just wanted to point out the fact that they give it in per earnings per share. So Apple might have earnings per share of a couple dollars. That's not saying that Apple's earnings are that low. It's just that they break it down per share, so that way it's easier to compare between different companies.
Right.
So with the earnings reports, a lot of times it's almost like gambling, where you'll say you think a company is going to beat earnings expectations. So people will buy a stock if they see earnings are coming out. Now you can get the dates of earnings reports from this. There's a schedule online on the S&P's website. They have it, or the Nasdaq or any other markets. They'll have earnings reports for their companies. So Dominic.
So I just like to add that earnings are obviously something that are very important and you want to pay attention to. But at the same time, don't put all your eggs into one basket. Earnings isn't everything when it comes to investing in a company, and sometimes earnings can even be skewed because of how a company reports its financial position. Brett, would you like to explain more on that?
Yeah, so I have some personal experience with this. The company Planet Fitness, they had an earnings report come out. It was after January. It was after the January-February gym spike season after New Year's resolutions. So I thought it's a go. I put a decent amount of money into it, and it turns out it went down 7%. That was not a great buy. I eventually recovered. Now I happen to be up 10%, which is a perfect indication about how earnings are and everything. How just normal business operations can lead to a spike in share price. But that was definitely a learning opportunity for me. And now on the flip side, I invested in Netflix before earnings, and that was 2 earnings reports ago now, and their share price spiked 8% that day, and has continued to rise. So earnings reports are a mixed bag, and it's just important to remember that when you're buying stocks based on earnings report schedules.
Sam, would you like to add anything on earnings?
Even if earnings are good, the stock can still go down even if earnings do seem good. When Brett was talking about Planet Fitness, I remember their overall revenue was up, but the reason they went down so fast is because their same-store sales were maybe down to 15%. So it's very specific like that. Also, it is a gamble because let's say a company, everyone thinks it's going to be around 70 cents per share, their earnings, and then it comes out that it was 67 cents per share, just a few cents lower. That could be catastrophic. That could be slightly bad. People just might not care at all. So it could go either way. Earnings, normally higher earnings is better, but it's not always the case.
Yeah, so speaking of earnings, GE is a great example of a company that had a bad it was a bad earnings report. It wasn't terrible, but because they announced their dividend cut at the same time, their share plummeted. And now because of that, they were actually just recently taken off the Dow Jones Industrial Index. Analysts were debating about the effect that would have on the share price and the company going forward. So Sam, I know you were looking into potentially buying GE and you were doing some research on it. So we'd like to get your input on that situation.
Yeah, basically, first off, GE being taken off the Dow, although it seems significant because the Dow is such an important indicator of the economy, so it's like, whoa, they got taken off, that has to be terrible for the stock price. It really wasn't. It's more just symbolic, because being taken off the Dow isn't going to affect how many shares are bought or sold directly. So it's more of just kind of an end of an era thing, because GE's been such a powerhouse for such a long time, and now it just seems like they're just dying, and it's like sad to see them go, I guess.
Right. So, just for our viewers that don't know, GE General Electric got replaced in the Dow Jones Industrial Average by Walgreens. In case anybody hasn't heard, and that's what Sam's referring to there when he says it's not a very big deal. Mm-hmm. Some other opening news we'd like to talk about today is a potential trade war looming between China and President Donald Trump. President Donald Trump has threatened to put tariffs on billions of dollars worth of Chinese products. Would you guys like to talk about what that might mean to the market?
Yeah, sure. So, in terms of the trade war, GE is actually a perfect case to study when studying the trade war, because of China's dominance in the global market. GE has actually been replaced in terms of one of the biggest manufacturers for appliances, and especially like washers, dryers, along with infrastructure implementation like electricity that used to be one of GE's biggest industries. It still is in terms of percentage of their overall revenue, but that revenue has gone down. So each of their industries also decreased. So Trump's idea was that we tax China's imports, and that'll cause more U.S. goods to be purchased as they become cheaper for the consumer. However, I personally feel that'll be detrimental to both the United States and Chinese economy. And in the past, trade wars have never turned out well for either party.
Yeah, they're always bad. They're always bad.
Yeah, so we're talking about billions of dollars in tariffs. And so it's important to note that tariffs aren't on everything. But if we look at two things like soybeans and steel, they may seem unrelated, but soybeans are going to be not so heavily taxed when importing into China. So farmers, they will be heavily taxed when importing into China. So that will cause soybean farmers in the United States to have less revenue, as 35% of American soybeans are currently exported to China. So although there might be jobs created in other sectors, soybean jobs, whether that be farmers, people who make equipment for farming soybeans, everything down to real estate agents who deal with buying and selling farms, will have a job decline. But then on the other hand, with the steel industry, because there's going to be high tariffs on Chinese steel, U.S. steel producers may have a boost in jobs. But it's also important to note that companies that use Chinese steel are not going to have to pay more for their steel and get American steel. So that might hurt their job performance and their overall company performance.
Right, and it's also important to note that after President Trump threatened these tariffs on China, sometime last week, I believe it was Wednesday or Thursday, we saw the soybean market dip 9% in prices. And soybeans are also the United States' largest export, so obviously very important.
Yeah, so now if we move on, one of our next stories is about how Google spent $500 million onto buying a portion of JD.com, which is China's second largest online retailer. So that's kind of the flip side of the trade war. There's still massive amounts of investment in the emerging markets by United States companies. So it's not like the relations between China and the United States are completely diminishing. However, they definitely were hurt by the potential of a trade war.
Right.
So these emerging tech markets, first off, with Google and JD.com, there's also a lot of investment with Amazon and Walmart down in India, a huge market that is very untapped. I know Dominic can probably build on that a little bit better.
Right. So with emerging markets, the two big countries we really want to focus on is India and China. India and China have a large population and are developing rapidly. And when it comes to developing rapidly, there's an improved standard of living and a growing middle class. With a growing middle class, that means there's a larger market that can afford products in retail stores that such places such as Walmart would offer, and e-commerce such as Amazon and JD.com. So it's really important to think about these emerging markets when you want to look into a bigger market and try to expand your profitability, which is what companies like Amazon and Walmart are trying to do in India right now. I also think it's interesting with this acquisition of Google acquiring a portion of JD.com. It kind of shows you that there's kind of a dynamic of Amazon versus the world right now, where Amazon is just such a large e-commerce giant. It seems like all these other companies that, even though they are fairly big, they're all trying to purchase up more and more companies and trying to grow big enough where they can seriously compete on an e-commerce battlefield with Amazon.
Yes.
So,
yeah.
Probably just on that.
Yeah, so I just wanted to say that the biggest e-commerce site in China is currently Alibaba, and of course JD.com. They are huge players that U.S. companies are looking to scoop up. But in India, there's another company that Walmart just bought. I believe it was a 12% share, but I could be wrong on that. Which is the second largest in India. And when we say second largest, it's by revenue and market cap. It's the combined figure. It's ranked by international organizations. And there's such large earnings potential with these massive companies in India and China, just because there's so many new consumers that haven't previously had the ability to purchase goods like there has been the ability in the United States. So if we move on to our next news topic, the CEO of Starbucks stepping down, I just wanted to say that Starbucks as a buy right now, I'm not sure how I feel just because there's so much uncertainty. But the fact that he's stepping down could be indicative of further like CEO become president situations. So Dominic, would you like to expand on this?
Right. So with CEO of Starbucks Howard Schultz stepping down, we saw a dip in Starbucks, I believe 9-10% last week or earlier this week, I think. My bad. And I'm not sure if Starbucks is necessarily worth a buy now either. I'm a little bit skeptical of how much more of a market share they can really grab in other countries. Recently, I just heard a news outline about how Starbucks has been struggling in India right now with a couple new startups in the coffee game competing with them. I'm also skeptical with how many overall customers Starbucks can still get. You know, how much more people are really going to drink coffee. I think they've tapped their peak really in the customer market. And so I would consider it a hold right now. I also think it brings a big question into how these CEOs might potentially run for political offices such as the presidency. Howard Schultz hasn't announced that he plans on running, but he's put it as a possibility that he might run for president in 2020 or future elections. Obviously, Donald Trump was a businessman his whole life and owned several corporations, and it just begs in the mind these business-minded people and how they'll run for political office in future years. Sam, would you like to build off of that?
So just one quick thing. Obviously, Starbucks has always been very expensive for just a cup of coffee since they started. And the reason they've been so successful is because they're able to convince people pay more for coffee, have a nice environment, it's good coffee. So it doesn't matter now. In these other markets, people might not have $5 to spend a cup of coffee. It's a lot of money. So Starbucks might lose some market share over their high price. Also, with what you were saying about Howard Schultz running for president, so yeah, even if he never directly said, he definitely caused some skepticism. And if there's any Democrats out there, I would be excited that Howard Schultz might step up. He seems like a good candidate to me. I'm not trying to say my party affiliation or anything. Just saying, yeah, he's probably going to be running as a Democrat. So that could be interesting, Trump versus Schultz, two major former businessmen competing for the presidency.
All right, so
And
yeah.
sorry, just building off of that, I'd like to also point out that Starbucks had a recent part of their dip of 9% was that there was analysts expecting about a 3% revenue growth in Starbucks over the next quarter, and they came out and said that it would roughly be around 1% instead. And they also recently had the PR incident with the calling the cops over a certain race issue, and they've had a seminar since then and trying to, retrain a lot of their employees on how to deal with it, and that obviously could negatively affect the company down the road.
All right, yeah, Sam.
With that racial training they had, I thought that was a great thing they did because it was all about, and this is what this came from the CEO Schultz. So I think just before he stepped down, but that subconscious view of what people think was worth. They lost $12 million that day, shutting down 8,000 stores, but it was worth it because they need to make sure as a company that people. I mean, you don't want the whole American public to think Starbucks is racist, and they're not. I think so. It's good that they did that. Yeah, right.
And it was also a great PR opportunity taken by obviously CEO of Starbucks along with the whole company. I got people to talk about them, and generally the view of the company was increased in the public eye. So if we move on, we're going to talk about our personal picks for the week, and then give our opinions about the other one of our authors' picks of the week. So for me, I think that CVS is a great buy right now. It's definitely 6 month, 12 month. Even after that 5-year, 10-year outlook buy. They just bought one of the largest insurance companies in the United States. And that would obviously bring in big business if they could discount medications that come from the CVS pharmacy, which is a huge deal for them going forward. And the insurance company, Aetna, correct?
Correct, I believe so, yeah.
Yeah, that's great.
Okay, so that would bring in massive amounts of revenue. Now, there is an argument that the share price already reflects that, but I feel that acquisition will secure CVS as a major company going forward.
Right, so my pick of the week is PayPal. Now, in a growing world where technology is continuing to improve at a rapid rate, mobile payment seems to be the future. You see things such as Apple Pay now being used in tons of places. It's more convenient. In China, over $5 trillion worth of volume is towards mobile pay. Cash, physical dollars are almost extinct now in countries like China. And the United States is starting to show a growing trend of that as well. And it's important to note that while PayPal, not only does it allow you to transfer money online to other people through your bank accounts, they also own Venmo and Zoom, which also allows for mobile payment, and Venmo is a popular money transferable app. And I think a company like PayPal has a bright future. In the past 6 months, it's up 13%. I believe it's trading at $85 right now. I think companies such as that, Tencent and Alibaba as well, all with their control in the mobile payment game right now, I think they have bright futures ahead of them. So, Sam, what's your pick of the week?
So I'm going to go over to the cannabis industry and say Aurora Cannabis. That trades on the Toronto stock market as Acbff. Now, the reason I'm saying this now, recreational cannabis was just fully legalized in Canada, and we're going to see implementation of that law planned on being September. It could be slightly later, maybe late September, early October, but somewhere in September, once all the provinces are ready, cannabis will be fully legalized in the entire country of Canada. Now, obviously, that's going to be huge for these marijuana stocks, which already have pretty high evaluations in the billions of dollars, even though they don't have the sales to back it up. Now, once this implementation starts, I think, and what I've seen, most people think that these cannabis companies their revenues are going to soar, and the next few months should be great for them. After that, I'm not sure what will happen. No one knows. But I would say buy Aurora Cannabis now. They've been ramping up production like crazy. They should have a good earning season, which is coming up for them very shortly. It won't be insane because the green rush, as it's called, hasn't taken off yet. The green rush is what it's called when cannabis gets legalized. But their revenues have still been growing well year over year. It could still be, I remember last year was like 30% year over year, quarter to quarter, which is very nice growth. So that should happen again. Their earnings seasons have historically been good. I think they'll stay good. And over the next few months, when people really start to anticipate that full implementation of legal cannabis in Canada, I think their stock price will soar.
Right. So, just to add a company that I would like to hear your guys' thoughts on and just see what your overall mindset is on whether you want to buy, hold, or sell is Alibaba. Now, Alibaba's obviously been talked about a lot in the news nowadays. I feel like every article I see on Yahoo Finance is about Alibaba, but it's obviously a big company. It's controlling China right now practically. It's called the Amazon of China. It's got holds in retail, mobile paying, etc. I would just like to hear your guys' thoughts on Alibaba and whether you think it's a buy or sell. Brett, do you have any thoughts?
So I personally just bought Alibaba about a week and a half ago. So obviously I think as a buy, I would go so far as to say it's a strong buy. If we were to use a 1 through 5 scale, 1 being sell, strong sell, 5 being strong buy, I would give it a 4.5 or even a 4.9. I feel very bullish about Alibaba right now. Sam, I'd love to get your thoughts on it, though.
Yeah, Alibaba, they're huge. And as they continue to create their footprint around the world, it just doesn't seem like they can do anything that's going to slow down their growth. They're very safe. They're very large. They're very influential. So if you invest in Alibaba, I'm not saying you're going to double your money in the next year, but you're not going to lose any money either. I can tell you that.
Well,
yeah,
that's never a guarantee. But they have such a large market, and their market is also expanding faster than any U.S. company, just because of China's rapid economic development. So I think we agree that we're all fairly bullish on it.
Right.
Yeah.
Oh yeah, strong buy.
I put it almost nearly a 5 as 5 being a strong buy. I feel very good about it. I do think an interesting point that maybe not now, but you will see in years to come is, will Amazon and Alibaba run into each other and tapping in markets, and will there be an e-commerce battle to expect in the future of two giants? I do think Alibaba is destined to grow, though, and I do think it's a must buy. What are your guys' thoughts on the other picks of the week we've talked about today? What do you guys feel about CVS? 1 being sell, 5 being a strong buy.
So I'm a 5. It was my pick. I feel very strongly about it just because of their recent acquisition. Sam, how do you feel?
I think CVS will do great over the next year. I would even go as far as say year, just because, with this Aetna purchase of $70 billion deal, $69 billion, it's just a massive deal. And CVS being a pharmacy, Aetna being an insurance company, it's a great partnership, and I think it'll be great for the company.
And what are your thoughts on PayPal, Sam?
And then PayPal, also a great stock. Not sure how we'll do in the very short term, but again, over 6 months to a year, I'd say it's very strong. This e-commerce stocks have been growing very well. Square Incorporated is another very strong stock. But PayPal, very good company. I think they'll be great in the longer term. Definitely a buy or a strong buy.
Right, and I obviously think it's a strong buy being my pick. Brett, what do you think about it?
Yeah, so I definitely, over the next 6 months, I would give it a 4 on the 1 through 5 scale, but there's just so much competition. It's also not unheard of for a Chinese company to come over in the United States and almost dominate the market share. It might be a smaller example, but still an example would be with Segway. Segway started, they're supposed to be the future. A Chinese company bought one, reverse engineered their technology, and created essentially a knockoff, and then ended up buying the original Segway company. And I feel with Alibaba and Tencent's experience in the field, I feel that there might be a threat to PayPal. Now, PayPal might handle it beautifully, but just the uncertainty for the year 2, 3 year outlook, I have to give it I would say like a 3.5. I'm not saying not to buy it, but I don't know how bullish I am on it. I just feel that with the increased competition, that there's some uncertainty there. And also the other thing to consider is Apple Pay and Android Pay, because people already have the devices. They might be more willing to go with those services instead.
Right. So how do you guys feel about Aurora Cannabis?
I'm actually planning to buy some this upcoming week, so I'm fairly strong on it. I have to give it a 4.5. I had it a couple months ago, and then I sold. I got lucky. I sold before it crashed, so I sold it around 8.5. And then now I'm looking to rebuy.
Yeah, with Aurora Cannabis, there has been a lot of volatility lately. There always has, because it's a very new market, and we're still trying to figure out what to expect from it. But yeah, I also do personally own Aurora Cannabis. I should definitely say that, so I don't seem biased or anything. But I really do think it is a great company with great potential for the future. If you do buy it, be warned, there could be severe volatility, so you might see days that are up 5% and days that are down 5%. It's been happening for, quite some time now, and I don't expect that to stop anytime soon.
Dom?
Right. So I'd say about a 4 for me. I'd say it's definitely a buy. I'm actually also planning on buying some Aurora very soon. However, I do worry about their long-term potential a little bit. I think short-term it'll work out beautifully. Long-term, I'm a little concerned about the markets that they're going to face, the competition they're going to face, and the United States market and other global markets. A company like Aurora, they have a head start in Canada and the technology. They could easily get with their head start, they could easily, dominate potentially the U.S. market and the global markets. But there is a serious unknown there. You don't know if these countries locally would want to use their own companies. So I do think it's a bit of a risk long term, but I think short term for sure it's a buy for me.
Yeah. So back to an older topic, a little bit of an older topic with PayPal. Facebook is also in the mobile payment game. I just want to mention that it slipped my mind before, but because they have access to so many members, if they could implement an Apple Pay Cash similar system that works between Apple and Android phones, I think there's a serious market for that, and they could take over the mobile payment game.
Yeah, that's a good point. Like, if Facebook introduced something, PayPal could see some serious trouble. Same thing happened with Match.com earlier this year. Facebook comes out, said they were going to make a dating service, and you see Match.com just love it.
Yeah,
so,
that's a good point.
Very different services, but very similar concept. These powerhouse, there's so many powerhouse companies with the money and the sophistication to compete with PayPal. So it'll be interesting to see what happens with it.
And the user base, of course. Facebook's 1 point something billion members definitely gives them a leg up in any system they implement. So now moving on to some stocks that we feel pretty bearish about. For me personally, I don't want to say big box stores in general because there's examples like Best Buy that have been doing better than ever. But Bed Bath & Beyond, excuse me, and JCPenney, I do not feel very strongly about them. I would say I feel strongly about selling them if you own it and avoiding them almost at all costs just because they can't compete with the big box stores. It's always possible they do what Best Buy did and turn their image around and implemented policies like with the free returns and price matching. which I personally believe saved Best Buy, along with, of course, their Geek Squad and technical support services. So I have to say, JCPenney and Best Buy, especially, not Best Buy, Bed Bath & Beyond, and maybe even Macy's, I would avoid and or sell if you could at the moment.
Right. So, I think in a lot of brick and mortar designed places, companies, you need to be careful. JCPenney, Macy's, those being some. You're going to have larger companies like Walmart that'll group together, buy different companies, try to access different markets. They have the cash needed to have a foothold in e-commerce and compete with these bigger companies. But smaller brick and mortars such as JCPenney's and Macy's, I have a stronger, I struggle to see how they're going to compete with e-commerce giants like Amazon.
Yeah, and it's also worth noting that these brick and mortar stores, they have been struggling. Hence, Sports Authority and even Blockbuster and Toys R Us now, massive companies that people thought were too big to fail. And now in the last couple of years, because of Amazon, it's easy to blame it on Amazon and e-commerce. Of course, there are other factors involved. But because of the changing market and the environment of retail, these brick and mortar stores that are too slow to adapt, I think, are going the way of the dodo.
Right. So, a company I personally think is a sell is ExxonMobil. They have a stronghold in the oil market, but simply with oil depleting, fossil fuels depleting, an environment where alternative energies are clearly going to be needed, ExxonMobil might, and they already, I believe, have begun to try and tap into these alternative energy markets that companies like Tesla might be, they have as well when they use the power of their cars. But I think ExxonMobil, I think they're going to have a serious time struggling down the road when oil starts to dry up more and more. It's down about $10, I believe, in the past year alone, and I'm not feeling them. Sam, do you have any comments on that?
Yeah, building on ExxonMobil, I would agree with you, just because the rest of the world, maybe America politically, we don't seem to be trying to, save the environment as much as other countries are, but it's definitely seemed to been ramping up lately, even starting from McDonald's just not using plastic straws, just small things, but you're seeing more and more trying to be more green and just trying to be better for the earth. And ExxonMobil they are working on some new renewable resources, but in the long term, they were founded on oil, and once people start to move away from that, it's just gonna be bad.
And just if I can interrupt for a second, I'm assuming when you say the rest of the world, you mean the developed world.
Yeah, rest of the developed world. Yeah.
Okay, so that was the correct assumption. Yeah, I have to say I'm also pretty bearish on ExxonMobil. Now, it's also important to note that crude oil spiked today, and today being the date that this was recorded on, which is Saturday, June 24th. Crude oil spiked, and that gave ExxonMobil shares a nice boost. So get out while you can is what I personally feel. It's possible that crude oil continues to go up, but because of Exxon's susceptibility to foreign affairs in the Middle East, especially, and in Russia, which apply massive amounts of oil to the United States, I do not believe in Exxon's future. Maybe over the next couple of years, but I feel there's better places to put your money, and that their 50-year, 10-year future is not looking so hot.
And then a company I'm very bearish on, Snap Inc., Snapchat. We are targeted to millennials, and I'm sure a lot of you use Snapchat. And I know Dominic disagrees with me a little on this one, but Snapchat, from the second they IPO'd, which just means when they were released to the stock market, basically, they've just been downhill ever since. They've had maybe times where it looks like they're coming back up, but overall, they've gone from roughly $27. I believe they're down to like around 12.
They're at $13.20 as of Friday.
So, and I just don't see them ever coming back up. They've since they've IPO'd, it's only been roughly 8 months, but they've never done good. They have massive competition, especially from Facebook. Facebook's going to be their worst competitor because Facebook is such a powerhouse. They're so influential. Well over 1 billion active monthly users. And and I just don't see Snap being able to get a foothold competing against Facebook and also Instagram. And
which is owned by Facebook.
I'm expanding overseas into other countries either.
And Instagram is owned by Facebook, so I would see that as United Front.
Right. So also just to note for the audience is IPO stands for Initial Public Offering, and it's when a company first makes its shares available to the public once it's on an exchange, and that's what Sam's referring to when he says Snap's IPO. I also feel I don't think Snap's a buy either. I personally think it's a hold right now. I think there's potential for it to possibly go back up. I'm seriously not recommending it as a buy right now. Me and Sam have disagreed a little bit on snapping, but I can't deny the facts. Competing with Facebook and then which owns Instagram, it's a tough challenge. If Snap continues to struggle, it could struggle to a point where Facebook might even look to buy Snap eventually. That's just a potential, theory.
So it's also important to note that I feel bearish on Snap, but I feel that way because their services, I don't want to say is limited, but there aren't as many monetization opportunities. Yes, they've started displaying ads, and their number of ads have increased, along with sponsored things on the Discover page. But Facebook's selling of user data might be controversial, but it's made them massive amounts of money. And Snapchat being an app, and pretty much being controlled by the major smartphone makers, being Apple, Samsung, Google, etc. They have less earnings potential, and that's why I feel that they are a weak company.
Another thing Snap has done is their spectacles, which are basically glasses with a camera built in that you can Snapchat from. Now, I just find that completely ridiculous. They're expensive. It was a major bust when they first released the spectacles. No one bought them. It was money. I actually recall the CEO of Snap said something similar to how in roughly 5 years, Snap would be more like a camera company. And listen, my final take on Snap would be, if you're considering buying, just don't. And if you own it, you should probably just sell. They've been all right in the last month. So if you held it for more than a month, at least you got some of your money back.
Yeah. So the spectacles. I mean, I don't think that the company was thinking that the spectacles were going to turn them around into a hardware company, but I think they were indicative of the fact that that Snap's hardware business is not going anywhere anytime soon. Now they do have lots of capital to try again, but if you look at things like GoPro with the camera companies, it's apparent that people buy a camera and then hold it and then hang on to it for a long time. It's hard to expand. It's hard to continue sales, and that I don't think that they have a future as a hardware company, and that their social media platform will continue to expand. Maybe not so fast, maybe not as fast as it has in the past, but I think we all pretty much agree that it's not a good buy. So,
right.
a
small market company. Before we forget, I would just like to add that we all have looked into is Antares Pharmaceuticals. Sam has he's really been researching this, so I'll leave the floor to him.
So yeah, basically Antares Pharmaceutical. Now this is a much smaller company. There's definitely higher risk with it. It only has a market cap of roughly $500 million, and they have had a questionable history. So you'd say, why would you consider this? Well, analysts seem to like it. If you go onto Yahoo Finance, you'll see that there's 5 analysts on there. They all have strong buys or buy ratings for Antares. Also, they have you can tell from their financials that they're not turning a profit, but it's because they're reinvesting in themselves. So they've been around for a while. They haven't done great. They're basically at the same price they've been at for the last 15 years. They've been maybe at $1. Now they're at $2.70 a share, and that's over 15 years. So not much change there, but I definitely think they have the potential to ride some interesting drugs that they've been working on, and they've been steadily growing a little bit over the past 2 to 3 years. Their revenues have been growing. Their earnings per share, which Dominic was mentioning before, has been getting better. So I might not see them as a long-term great buy, 5-year buy, but over the next few months, I would consider them a good investment to me.
Yes.
Right. So.
Oh yeah. So I personally have mixed feelings about Antares Pharmaceutical. On our standard 1 to 5 scale, I give it a 2.5. They're just such a small company in such a large biotech field, and their performance they're down on the 5-year, which for me I personally find to be indicative of their future. It's not always the case. They can very well turn around. I can tell you I will not be buying any Antares Pharmaceutical, but it's just good to keep an eye out for the smaller fish that could potentially grow and have much more earnings potential.
Right. So when it comes to Antares, it's definitely a big stock when it comes to growth. You know, if you're looking for something a little more riskier, but with high potential returns, Antares is definitely an interesting stock, I think, to look at. I personally like it. I'd say on our standard 5 scale, maybe a 3.5. I personally own some of Antares myself. I think right now is a good time to buy it too. It's had a recent dip, and I think it's a good buy at the moment. I wouldn't put as much money as possible into it. Obviously, it's very risky, low market cap, but worth maybe a little bit of money in it.
All right, so if you guys don't have anything else to add, this has been just the thought, investing for millennials, and our standard ending, or becoming our standard ending, is a quote from Warren Buffett. So I will leave you with a quote. In the business world, the rearview mirror is always clearer than the windshield, and this can be taken personally in the fact that hindsight's always 20/20. If you make a mistake, you sell too early, or you bought at a bad time, don't beat yourself up over it. It's all about average returns, not just per company. You never lose money by selling for a profit. So even if you sell up 10%, the company goes up 30% after that, you still made money and you learn from the experience, and going forward that will help you. So this has been Just the Thought, investing for millennials, and we'll see you on Friday. Have a good day or night. Bye.